Here we go. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. As you can see from our dashboard, we are slowly working away, filling out. I'm not quite sure why I lost my newsfeed URL. That shouldn't be down, but our breadth data is not quite updating, and I see some of our stock indexes are a little bit splotchy. So, as you can see, we're still slowly working away on our developer cycle, but slowly making progress. Great to see the screeners are up and running and doing their thing, so please feel free to check that out. I think we still have the free trial going, but great to see the work Stuart and Julian are doing. We did have Thursday is the baby powder report, Julian's day on the Daily Brief, and I thought he did a fantastic job here today. Told us about a trade setup, a spread trade setup that he's shooting for 700% return on his trade. So keep your fingers crossed for him. Hopefully he bangs out a nice options win. And it's great to see our options interest on the site is really expanding. I like to, for the purposes of this video, I like to talk to you guys off of basically the same chart framework day in, day out, and I kind of like what I'm seeing here. We've talked recently about risk on, risk off. US dollar index came back down, tested the bottom end of the range. Interesting how he left that gap left open there. We jackknifed back to 38.2, really fighting hard at this trend line. I don't really like taking trades on this kind of trend line breakout. Kind of the same thing with the bond market. I'm not overly excited about taking trades. I'd prefer to see the W on the other side of the trend line. And what I noticed today, hopefully you can kind of see that on the price chart too, but I had sort of mentioned this a few days ago. We had an assignment on Monday, which I think was Martin Luther King holiday, to all go to Top Step and listen to Mr. Hoagland get us going at about 5 o'clock in the morning Pacific time. But a good way to sort of start your day. And interesting coming out of that, ironically enough, we had sort of come to the conclusion that, oh boy, that is a big honking head and shoulders pattern developing on Euro. We had talked about it briefly with, I don't know whether I brought this to the public's attention, but we definitely talked about it on the site, and sure enough, Euro is really coming off. And, and interesting enough, you actually can make the argument that Euro is a risk-on proxy. If money is flowing into the Eurozone, flowing out of the US dollar index, technically that's growthy. So I have been talking recently about how I really don't like the idea of being long euros here, and I actually think that the euro is going to go into a prolonged bear market. But I had sort of said that they have a new governor there. And we should keep an eye on her. The market always loves to test new governors. And I noticed the headlines today. I doubt I probably have it here in front of me. But I noticed that the talking heads, basically Lagarde had her, I don't know whether it's monthly, but her update report as sort of the new ECB governor, and very subtly the ECB actually changed some of the wording in their statements. And I think the market's caught on to that. They are seeing a bit more inflation out of Europe, which of course isn't really good if you're, negative interest rates. So there is a impetus to get out of euros and get somewhere else. So I thought that was an interesting outcome of the ECB meeting, and Lagarde. Now we definitely have a market structure here that's probably going to act as a bit of a brick wall on the euro going forward. It's interesting to see, we risk on, risk off. We do spend a lot of time through these free videos talking a bit about that. And I even put a tweet out today. You can really feel that risk off is coming back in a big way here. I don't know whether it's trending or whether this is just bucking the prevailing uptrend in risk. We did see that euro chart. That doesn't look good for risk. We also notice too the stock market itself. You can see it's kind of waffling. It's wavering a bit up here. What I find fascinating about this, of course, is remember we spent a lot of time last week talking about the really important 330 strike price on the SPY puts, and they took it up through there, and you can see, is this like a distribution up top there? Could be. Don't really have any outright sell signals here, but we've been talking, of course, January barometer as we are working our way through the month of January, and we're finally seeing some backing here. After just an absolute relentless move up. You notice that we could have fractal topped out here, but nothing really came in following that. We could have railroad track topped here, nothing came of that. We could have fractaled out here, nothing came of it. Now we finally have an actual little fractal top here, sloppy as hell, because really if you look at this from a higher time frame, what this really does on the daily charts is it sets up one of these bull-bear battle lines, but it's massive. And this is kind of like that Newmont trade, which maybe we'll talk about in a little bit, where I don't really have anything because nothing really set up. So, I might argue at present that that's your trading range now on the stock market. It's just an absolute mess. And really, it's too early to call tops here. I would, go slowly here. Don't chase. Try and hunt your setups. And of course, as long as this market has a general uptone to it, have some fun in the junior stock market, because oh boy, wow, are we ever having a blast trading these junior stocks right now. So long and short of it here, January barometer uppy, risk on, coming off a little bit. Me personally, I think this was all about that massive options strike price on the leaps. And we're sort of letting the dust settle following that event. And considering January barometer, first day, first week, first month, the month, I mean, everything's saying that don't be in too hurry to put a fork in this thing and call it done. And unfortunately, when the correction does come, oh boy, it's going to be violent. So, I don't know whether that helps you or not, but that's sort of what I'm seeing. Risk on, risk off to a certain degree. And I guess it kind of makes sense. I don't think risk on has broken down. It's over just yet, but sort of the first salvos have been fired. Bulls, you better be careful. And also, too, remember I had sort of said about the bond market there earlier. I don't necessarily get a buy signal here on the bonds. Because I really don't like taking trades on trendline breakouts. That's really dangerous. I want to see a W on the other side of this. And also, too, we talked recently about how the talking heads were all basically saying look for 1.70% on that 10-year yield, and that's basically where the market is now. Also, too, and this is an interesting event because, we've talked recently about how the U.S. dollar is pointing up, euro's pointing down, U.S. dollar pointing up, that's sort of risk off, get your money out of the market, put it in T-bills, nice and safe and secure. I think you can make the argument Japanese yen with this inverted empire, which we talked about a couple days ago. You can see the follow through here. We are in the process of filling in this little gap right now. But believe it or not, I think yen could actually work its way right back up into this wick up top here. And it'll be interesting, this is 38.2 drawn off of that level. Let's see what happens where 38.2 lines up off of this new level. So believe it or not, I think I could actually see yen work its way up here. Same sort of thing with the bonds. I could see them move up a little bit more. Yields move down a little bit more. But I don't know whether this is necessarily a new buy signal. And kind of the same thing on yen. Now that we're on the other side of the trend line, what I really want to see is a W on the other side of this trend line for me to believe that the trend has actually turned higher. So we'll see. Only time will tell. What's interesting about the gold market, and again, Baby Powder Report, Julian doing a fantastic job. His little lower time frame setups had him buying on a test of these lows. Beautiful trade there, sir. I've been sort of thinking about, the gold itself. I can't really think about shorting it until we get back up top here. Wicks and tails like to be eaten. Maybe yen works its way up, eats that wick up top. That's what takes the gold up top here. Not really a trade to go long for me per se here. Lower time frame futures traders make sense. I don't really have that big of a problem with it. But lower time frame futures traders, they're going to be taking profits on this kind of move, whereas I'm going to be thinking about, well, do I want to short up here? What I find really interesting, of course, is I've been watching Newmont really closely here, and I got to say, man, this thing is putting up one hell of a fight right in this reload zone. If gold was such an awesome kick-ass buy, why aren't these gold stocks all breaking up to new highs? Something's not right there. And oh, gee whiz, now Barrick has gotten up into his reload short zone. So, it's almost like Newmont's running maybe about 2 or 3 days ahead of Barrick. But, I mean, I think I showed you earlier on the S&Ps, right? Like if we were going to go off of candlesticks, that would be bullish continuation, move up through the top. And remember I'd said the other day that I really didn't like the way they gapped the market lower, closed it up higher. So what ends up happening is that actually is your fail level. And look at where today's low is. So you can really see there's a hell of a battle going on with Newmont right now. And gee whiz, look, they left a big old honking gap right up top here. I have no idea how the day's going to end here, but I do find it interesting that as we sort of rallied up into these resistance levels, they're whacking her back down. I think it's really, really simple here, guys. We move up through the top here, and really, Newmont, we're talking about 50 cents. Big deal. Just go and take the 50, 60 cents, get it done. We know that we're in a bull. Same thing on Barrick. Now, Barrick's got this nasty outside-downside key reversal working. It doesn't surprise me that rallies up into this level are going to see sellers. But, if this is a bull, just take it up through the top here, bust the key reversal, and we're back a bull again. Also, too, what really bothers me here about Barrick is, gee whiz, big old ugly holes down at the bottom here. So, I'm not really getting huge breakout signals on the big gold stocks. I did find it really interesting, and I don't know whether this is a commentary on silver or maybe the intermediate markets firming up. Junior stocks, I have a couple little junior stocks on the books. They're looking a lot happier. But the gold and silver index put in this bullish key reversal here. And you can see she's trying desperately to hold on to that reversal signal. Looks to me like, honestly, we just closed down below here. We're probably going to have to come back down and revisit this trend line. But that's pointing up right now, so there's no real reason for me to step in front of that. And so I'd sort of said, I put out a tweet earlier today with this picture, and then with this picture, I'm not in a huge hurry to short risk off. I still do have a short position working on the bonds. It's an option. I'm not really too stressed about it. I have been humming and hawing with you guys here and site people about, should I just take the position off down here? Hindsight's 2020, of course. Yeah, it looks like goddamn market moved higher. But I'm just going to leave that option on the books. Still got a few months to go. We'll see. I mean, that's the great part about options is the maximum risk on the trade is the purchase price of the option. So. All right, so there's sort of your risk on, risk off kind of conversation. Still scratching my head over stock market, but like I said, we're starting to see the first salvos of weakness out of stocks. And of course, oil can't buy a friend right now. And this is so typically seasonal. In fact, somebody was asking me before we got this going, are you ready to step up and buy oil yet? And I'm like, no. Probably a good couple weeks, let these moves exhaust themselves. If they start rolling over, then we'll probably start seeing bottoms come in on oil. But there's just nothing to do there right now. And, like I did have some oil stocks on the books, and I pulled up the charts and just drew reload zones. If you want to join me, you can see the reload zone on oil itself. We're starting to come down into that area. So we're getting location. Now we want to see signs of divergence, signs of structure, and then, of course, we'll know that oil's back in a bull, but it ain't there now. Brian loves to toot his own horn, so might as well toot, toot, toot. Came out last week, I think it was, and said I absolutely love this W, and hopefully you can see why I like Ws. And sure enough, we're sitting on a nice 50, 60% return on this position. But just to give you an idea of the context of this market, remember I'm thinking stock market up basically for the rest of the year. look how far this thing actually could come back. Is there any like real hurry for me to let this position go? I've got orders, sell halves on doubles, blah, 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 that kind of stuff. But, I mean, gee whiz, this stock from my 40-cent buy, just 50% rolls, this could be like a 4 or 5 bagger. So I'm not really in a big hurry to do anything here. But it's just such a good example of W's coming in, and you just got to pull the trigger and go. And, of course, live with the results. Here's one in the pharma space that I actually did buy a little bit of this stock here today, and I've got more bids working. So, this is after the fact. Brian, I can't buy that now. What the hell are you telling me this for? Yeah, you're such an awesome stock trader. Woohoo, party on. Here's one where you can see it's actually just gone and W'd, and it's worked its way back down into reload zones. And so I'm actually on the site. I said I have officially initiated a buy program, and I'm just nibbling away on levels on this one. So, caveat emptor. I thought it was interesting. We don't need to go into too much more detail. I don't know how long I've been talking here today. But, Kavarkinator. He's obviously all over this one. What do you think? Can you see the logic? Can you see the W's? Do you think this thing's got any room to move up here into the spring? Buy when it snows, sell when it goes? It's the same crap we do day in, day out. Rinse and repeat. Nothing new. But, if you can benefit from me showing you this every single day, day in, day out, then I've done my job here. Well, there was a really interesting one that I picked up here recently. I have no idea if this trade's going to work. And this is a great example. There's the W. Maybe you put on a little bit, don't chase, work some bids against levels. And this morning they give you a nice little backup right into cool little levels. So, this one hasn't gone, but this is one that I bought recently. The ideas are sitting there. Whether you decide to participate or not, it's entirely up to you. Obviously, this is a game of anxiety. It's a game of risk. So I would strongly suggest that you work off a trading plan. Try and identify what are the reasons that get you to act and just take appropriate risks. So, here's just another example of, us in the market doing our thing. Actually, there's 2 examples. And, of course, here's a great example of after the fact. Woohoo! On to crypto. I'm not going to really talk too much about crypto here today because, frankly speaking, the message really hasn't changed a heck of a lot. If anything, I'm liking the idea that the market was heavily manipulated around backed futures listings, around options listings on CME. But on balance, if we can somehow get beyond all these, injection of liquidity players into the market, I actually like the idea that crypto is a risk asset and it should follow along the path of risk. I know a lot of people will debate that with me. So the message that we had recently, and I think, broiler chicken shows and stuff, I sort of walk people through this. Where is that chart? And, oh, by the way, for all the YouTube people, I found my logarithmic growth rate charts. So you can see Phil B's level. We could easily come back a bit more here just to get back to his sort of value level. That's at about 7,500 here right now. But anyway. Yeah, this is the chart I wanted to show you. And I got to tell you guys, I sure hope you're taking screenshots of this because this, it works. It's stunning how accurate it is. So we had kind of told you the other day that we had a pretty big bullish event, 50-line cross, second W, woohoo. Then we had a trap move. Then we had a nice little polite message, bulls, cool your jets. And if we start Ming out again, second M's, well, that starts to say the bears are starting to wake up and take control. So, bulls, you are definitely on pause. Bears are nibbling away, having some fun here. We're coming up against the 50 line now. And notice, too, that's the old breakout level. Also, too, if we maybe just draw a simple trend line off of these lows, I think you can make the argument that we're coming into some sort of support line. So you got that trend line off of that low. There to there. And there to there. So, in this window, 50 line test, I actually like the idea of us maybe turning back up. And then, of course, if that carves out a big honkin' M through that 50 line, then we know we're in trouble. But for the short term, and through Baby Powder Report, talking to Julian, actually, he was trading some longs off the lower time frame. I do like the idea of a nice little swing back up. And interestingly enough, like we were looking at the chart and sort of saying, yes, the message is down, but is this really a good trade location? And I guess, where the hell is that damn chart I want to show you? What I noticed was, I suppose if we look at this, notice this cheeky little wick up top here, how they've left that sort of wide open there. So what I'm worried about, and this really isn't the best chart to show you, but what I'm thinking here is like A, B, C, D, take us down into some correction zone. 30 SMAs probably support. Looking for that move back up. And, if I was hunting trade location, I would probably be keeping a real close eye on whatever this reload zone level is. Because, off the daily charts, that's a big wick. So, let's keep a close eye. You can see lower time frames. Look, there's a cute little M coming in off RSI. So, counter trend rallies, reload short zones. That's that, what is that, 89, 83. So, almost looks to me like $9,000 is probably a good sort of level to keep an eye on. Then if we go back to that daily, we see that 9,000 is basically into that wick. Kind of like what you're seeing on the gold stocks right now, right up into the top ends of ranges, right? This is where the pros, they come out and they start really getting serious about, shorting against highs. So, ironically enough, risk off is done really well here today. Risk on's kind of getting beat up here a bit. So I kind of like the idea of us, finding some sort of short-term support, whether it be moving averages against key lows, whatever, and us having a nice little counter trend rally back up. But you can see, is this a buy signal? Should we be getting bullish here? And I think the answer is cool your jets. And I think I showed you off that weekly chart forever ago. Man, how long is this video today? This must be like a half hour or 45 minutes or so. I had sort of talked recently to you guys about things like megaphones, and I didn't know whether megaphone was going to turn into a diamond. I'm thinking megaphone. I guess off of this range alone, 38.2 is right there. So again, if this is a megaphone, then we probably should see some sort of pivot down in here, but only time will tell. Long and short of it here, I think TRI's message to the public was dangerous place to be a buyer, mountain man, higher time frame fail levels, 200 SMA. You got to let this thing clean itself up, and we need to see 3 higher lows for us to even think about trend continuation. With new lows here this morning, you just got to cool your jets, people. There's just not a heck of a lot to do there right now. I won't go into these guys here in this video. I'll just simply finish off this offering. Just quick boo. We do have people that are interested in buying altcoins on the site. Gee whiz. That shouldn't surprise anybody. Ada here, we've talked lots about him recently. Notice this big old tail. Remember, you have to be careful with these trading view and US dollar denominated charts. Is that tail even real? But what I do like is this nice double bottom, multiple bottoms, 1, 2, 3 lows. So if you're going to risk against a level, I really like that level. And of course we do reload zones. Gee whiz, what a surprise. The original double bottom level, horizontal support and resistance, lines up with that reload zone. So, people that are interested, I say you can work stink bids, or you can wait for price to come down in here and see if you get any sort of structure signal to get in. But remember I had said to you the other day, as long as this thing was Wing out, everything's tickety-boo. As soon as these indexes, this is poop perp, poop, bull poop, and moon poop. As soon as we start seeing M's in these guys, you better cool your jets. So same sort of message with Bitcoin. If you go through the entire crypto space, it looks very heavy right now. So I'm not really in a big hurry to go spend any money. And if I was going to spend money, it would be on like stink bids against reload zone lows. Okay, I sure hope that helps everybody. Have yourselves a great day. All the best, and bye for now.